The financial markets are once again staying in consolidation mode. But the euro is notably weaker against other currencies on news that the ECB and the Bundesbank are both checking the legality of the OMT bond buying program. A German tabloid, Bild, reported that the Bundesbank could challenge the program and bring the issue to the European Court of Justice, as it could violate the treaties for direct financing of state deficits. The ECB President Draghi has repeatedly said that the ECB acts within its mandate, as skyrocketing yields of sovereign bonds in some Eurozone countries affected transmission of monetary policies. The OMT plan has already had a drastic impact on the markets and brought Spanish 10-year yields comfortably below the 6% level after its announcement, even though it hasn't been kick-started. Bundesbank President Weimann was the sole dissenter of the OMT and was outvoted by other policymakers. So far, the euro's losses against the dollar and yen are relatively limited, but outlook in the euro sterling does favor deeper sell-off in the cross. Elsewhere in Europe, Germany seems to have got more and more impatient with Spain, with a government official stating that Spanish Prime Minister Mariano Rajoy should stop prevaricating and decide whether Spain needs a full rescue. Michael Mester, finance spokesman for Merkel's Christian Democratic Union, urged Rajoy to spell out what the situation is. He also said that Rajoy evidently has a communications problem. If he needs help, he must say so. The latest data shows that Portugal's tax revenue dropped 2.4% in the first 8 months of the year, compared to the same period last year, due to unemployment. Prime Minister Coelho said he is ready to announce a new proposal to increase workers' social security contributions while cutting corporate taxes. He stated that in order to meet the budget target, income tax will be the main way of achieving it. However, this has triggered a lot of dissatisfaction and protests were seen on the streets. In the U.S., San Francisco Fed Williams said that the current QE3 program, unlike the past asset purchase programs, doesn't have a preset expiration date. Such a program is explicitly linked to what happens with the economy. While the current $40 billion a month quantitative easing program is focused on mortgage-backed securities, Williams said that the Fed might expand the purchases to include other assets. Williams saw the so-called fiscal cliff a bigger threat to the U.S. economy than the Eurozone for the moment, and he doesn't expect the tax hikes and spending cuts to take place as scheduled, and will slow our economy's forward progress. Williams expects U.S. GDP to grow 1.75% in 2012 and accelerate to 2.5% in 2013 and 3.25% in 2014. But the unemployment rate is expected to drop slowly to 7.25% by the end of 2014. Note that some other Fed officials hinted that Fed would stop the open-ended purchase only when unemployment is back at the 5 to 6% level. On the data front, Japan Corporate Service Price Index dropped 0.3% year-on-year in August. The China Conference Board leading indicator rose 1.7% in August. German GfK consumer sentiment was unchanged at 5.9 in October. The Swiss UBS consumption indicator dropped to 1.03 in August. Canadian retail sales, US hour prices and consumer confidence are the main features today.